I've got a bunch of cards that we're going to be talking about over the next few days. Today I want to talk to you about debt to income. So I've done a couple of videos in the past, and we're going to try to link one that teaches you guys how to calculate debt to income. Debt to income is one of the most important parts of getting a loan. It's, as a lender, what I immediately go to, right? We go credit score, debt to income, and then assets. Those are the three pieces that we're always looking at. Are we looking at income? Yes, of course. That ties into debt to income. So here's the thing that a lot of people don't consider. How high your debt to income is and how house poor it's going to make you is going to depend on what state you live in. That's right. Yeah, because here's the thing that a lot of people don't consider, and lenders don't take this into consideration. Lenders have blanket guidelines regardless of what state you live in. Okay, so on a certain program, let's say the max debt to income is 50%. That's whether you're in California or Florida. Okay, let's talk about that real quick and something that you need to consider. So, as always, if a lender says you qualify for XYZ, you need to always ask, hey, what was my debt to income at that amount? Because you want to know if they are max qualifying you. If they are max qualifying you, you A, want to be afraid, B, you want to avoid that price, and C, you better do a budget to make sure you can actually pay that. Because let me give you an example. California, you've got your federal taxes, and you have state income taxes. The state income taxes, depending on tax bracket, can be very severe, okay? So if you're in a very high tax bracket, between federal and state, it's gonna eat up 45, 46% of your income. So if it's eating up that much of your income and you're at a 50% debt to income, you're not going to have much to live off of. Even if you're making a truckload of money, right? For the taxes to hit that level, you're going to be making a truckload of money. Florida, right? Florida doesn't have state income tax. So same situation, you're not going to have another 10, 11, 12% taken away in taxes. And that's something that lenders are not accounting for. So it's important that you guys are asking lenders, hey, if you qualified me, what is my debt to income? What's my front end and back end? So front end is the mortgage payment versus your gross income. So that's your before tax income. The back end ratio is your payments that you make on your credit cards, any child support payments, student loans, car loans, the monthly payment, and the housing payment versus your gross income, okay? I do not max qualify. If someone fills out an application with me and my team, generally what's going to happen is we're going to qualify you to that amount, but we're also going to have a conversation up front that says, hey, look, is this the amount you were looking for? Now, if we get that amount and your debt to income 70%, that's not going to work. We're going to cut that amount down to what the guideline is. So in that case, we would be max qualifying you because what you wanted was so much more than you actually qualify for. We're going to take you to what the program will allow, okay? Let's do it the other way. Let's say you do a $350,000 purchase and your debt to income is very low and you could easily qualify for $700,000, $800,000, $900,000. Am I going to give you a pre-approval letter at $700,000, $800,000, $900,000? No, absolutely not. Absolutely not. We're going to have a conversation that's like, look, you totally qualify for the $350,000 you want. Here is where your debt to income is. If you want to go higher, you can. What are your goals? Okay. The reason I do it that way, and some people are like, why won't you just give me my max? Because here's the thing, guys. If I suddenly hand you a letter that says you can spend this, but if you're mentally prepared to spend $250 and you're happy with $250, psychology shows that if I hand you a letter at $450, all of a sudden you're going to start looking at spending $450. Does that help you long term? No, absolutely not. I mean, here's the thing. Guys, if you're happy at $250 and can find a house at $250, buy at $250. Don't go up to $450, right? Don't. And that's why I don't max qualify, is because I don't want to be the person that's tempting your head to a space that's not as good for you long term. Now, if you're at $250 and you actually could go to $450 and you find, hey, Jen, we're not finding what we want, what about $300? I'd say, okay, cool. Let's look at the payment. How do you feel about the payment? Still comfortable? Great. Do you want me to go higher? okay? It's an active conversation that requires decision making and thinking on your part. When a lender just hands you a letter at a higher amount, they are taking out that decision making, they are taking out that thinking, they are taking out that pause. Okay, now if you guys read my book Brain Hacked, you guys know I am all about putting in as many pauses as possible when we're talking about purchases. That's so that you guys can make educated and empowered purchases. Okay, so if you go to a lender and they're max qualifying you without talking to you and they're not talking about payments, you need to run away. Just run away and call us. I am licensed everywhere but Utah and Rhode Island. Everywhere else, guys, we do loans, and we do loans in every single one of those other states. Sometimes people are like, oh, well, but don't you just do, no, I don't do California. My number one state, this is fun. I got a commemorative. Woo, that's right. Texas, number one right now. That's my number one state. Florida's number 2, California's number 3, and then it goes like Georgia, North Carolina, South Carolina. Anyways, look, we do loans everywhere. So you want to make sure you're actively having these conversations. And you also want to make sure that you understand your debt to income, which is why I'm going to have how you guys can do the calculation. Check out that video. And you just want to make sure you're working with a lender that's not just trying to tempt you, because that's what it is. Look, if someone said to me, hey, Jen, you can, if I was like, I'm going to buy a car, I'm going to spend $30,000, right? And let's pretend it's not me. My name's now Becky. I'm Becky. $30,000 for a car. And then the car dealer goes, Becky, you can buy this $50,000 car. Look how beautiful it is. Becky's going to suddenly look at the $50,000 car she never would have looked at before. So that's why I don't max qualify. I hope this video has been helpful. As always, comments, drop them. Like the video, like it, subscribe. You guys can text, email me, get on the calendar, talk to Alyssa and Sandy. Guys, we won't do, I need to say this because everyone gets mad when I don't. We don't do these calculations over the phone. These are calculations that we do in an application, because if I'm giving you information, if my team's giving you information, it has to be real. It can't be bullshit, right? That would be bad. But look, if you have questions, loan questions, you want to get pre-approved, reach out. We are here to support you. Thanks for watching.